Happy Friday! Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. It's Friday. Are we ready for some Juneteenth holiday action? Yes.
Absolutely.
Yeah.
I got a cookout going on. CoinDesk is celebrating on Monday, actually, because we've been celebrating Juneteenth before it was official.
Before it was a holiday. Before it was an official holiday. Yeah.
Yeah. But checking in on Bitcoin right now, the CoinDesk Bitcoin XBX index is currently trading at $37,510. Bitcoin is down about 3% over the past 24 hours, and the CoinDesk Ether price ETX index is at 22.93. ETH is down about 4% over the past 24 hours. So we're seeing a bit of slippage in the crypto markets right now. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So I'm seeing, on Twitter, it's Juneteenth. Some crypto folks saying it's time to buy some Bitcoin, but I don't see that happening right now.
No, right now the markets are kind of quiet. It's a weird situation because you have the dollar's a little bit stronger. You have, I think people are kind of a little more sure that the Fed will take, I don't want to say an aggressive anti-inflationary stance, but certainly they'll be more hawkish than they were before. Mm-hmm. And that's sort of like making things a little bit sour for Bitcoin. Kirkwood Bully had a story in today just about how there's kind of like a push and pull going on with Bitcoin, in that like people are looking at the dollar and they're like, oh, it's strong. Bitcoin should be weaker, but maybe it was oversold. Yeah. So that's kind of why it's like kind of stuck.
Michael Saylor, he had his Bitcoin Mining Council meeting on Twitter Spaces. A lot of people joined. I like the fact that it's transparent. It's open to everyone who can get onto the Twitter Spaces. He's saying that we're not trying to fix Bitcoin, but they were very cognizant of the narrative on Bitcoin in terms of its environmental energy consumption. So that's something they're trying to address, I think is interesting. Iron Finance, also, we've been tracking this DeFi element. They're admitting they suffered crypto's first large-scale bank run following a devastating token crash that brought the worth of the protocol down from $2 billion to near zero on Wednesday. The so-called run garnered even more attention than it would have because of billionaire investor Mark Cuban's use of Iron Protocol. And while declining to say how much he had lost, Cuban said that it was enough that he, quote, wasn't happy about it. DeFi is a very strange space.
Yeah.
Yeah. The question is DeFi really ready for prime time? Like, it was confusing enough, and now it just seems to be getting weirder and weirder, as our next guest will talk about.
Yeah. So our next guest wrote an article about how weird DeFi is. Joining us now is CoinDesk senior business reporter Brady Dale. Welcome to the show, Brady.
Hey, how's it going?
Oh.
Brady.
Perhaps do you have the mute button on, Brady?
No, it was working a
second
ago.
Oh, there he is.
Wait. There we go.
Okay.
There
all
we go.
Hey.
We checked it. It was fine.
So Brady, you wrote an article about how weird DeFi is getting. Give us a little summary of what you found here.
Sure. I mean, I think it really, the weirdness, it's a little tongue in cheek. Last year I wrote a story about weird DeFi when the story was the food memes, and that was honestly weird. You had the spaghetti meme, the yam finance, all that stuff. That was very strange. It was kind of a game that folks were playing. In fact, a lot of those were actually really financial games. But this new era, I think, reflects the fact that the market is maturing in a way that we saw the internet do, where it's starting to make things that you can only make with this technology. And that was a part of the story that ultimately got the internet to a place where, it generates more money than anything else ever did. So, just one example from the ones that I wrote about is this protocol called Convex. And all Convex does is it sits atop Curve, which is one of the popular automated market makers. It's one that specializes in stable coins, though it can do more than that now, but that's what it's known for. And Curve is also a really great place to mine new valuable tokens. They're CRV tokens. And so Convex, it just makes their yield farming on Curve is hard, and Convex makes it a lot easier. So that's all it does. It doesn't offer an additional financial instrument. It doesn't do lending. It doesn't offer a derivative. It's just making it easier for you to put money into Curve and earn more CRV token. So I think that's a good example of sort of the composability in DeFi and a way in which the whole sector is actually getting more advanced.
So Brady, I know this whole iron and titanium thing is maybe not entirely your bag here, but just did it fit in that sort of category? Or
Not
was
really. I don't think iron finance is a part of the mainstream DeFi story. I mean, I checked around with some folks about that yesterday. The kind of grown-ups in DeFi weren't paying attention to it. This was something that was, I mean, if you're making, I don't know, like the unbelievable gains there, it just obviously isn't going to work out over time. That was not it really wasn't a serious project as far as I can tell, at least not at this stage. I mean, sometimes things can start off really loose and sort of themselves out and become more significant later. But that was something to just sort of attract people who just look for big numbers and get excited. I mean, the fact that this is the first thing Mark Cuban showed up at, I mean, that's sort of what happens is rich people are dumb money a lot of times. And I think he was an example of that.
Yeah. Do you think that having him involved and losing that much in many ways may have hurt potential investment in DeFi in general,
No.
just because
No.
Okay. Yeah.
It'll be fine.
Yeah.
I mean, it's a sidechain small project that really isn't relevant to the larger DeFi story. No, I don't even really think it is much of a story beyond the fact that Mark Cuban got involved. And yeah, there was a bunch of loss in a short-term way, but we've seen a bunch of similar losses that have happened. This is a new rocky world. It's money on the internet. Crazy things are going to happen. But no, I don't think in the grand scheme of things, we're going to see iron finance as important.
Brady, let's just step back for a second and talk about the DeFi weirdness question that we kind of, mentioned earlier. So DeFi has always been sort of weird, at least for the average mainstream user, right? It's totally confusing to a lot of people. They don't understand what it is or how it works. And it seems like in some ways it's getting a little bit weirder and more niche in certain areas. And is this a problem in the sense that, you at the same time you kind of have exchanges and you have, various institutions trying to make DeFi more accessible to the average user. But if people can't really understand it, is there a risk here for buyers?
I mean, do you understand how your email works? I mean, I guess that's the thing. Folks start using things and eventually it doesn't matter whether they understand it or not. The hardest thing to understand about DeFi, but I think people will get more acclimated to this over time, and they won't need to be as acclimated to it either, it's the composability question, right? It's that entrepreneurs can permissionlessly plug into each other's protocols. So for example, Convex, the example I gave earlier, this protocol that helps you earn more money investing in Curve, didn't need to ask Curve's permission to do this. They just built the thing. And they were able to have people send their Curve tokens to them, and it all just works, right? It's just a different way of doing business. And as time goes on, just like the internet, more and more abstractions will be built on top of it that make it work well for people who don't want to look under the hood. That's the story we saw in the 90s and the early 2000s. That'll happen again in DeFi. But the truth is, people are making a ton of money. These things haven't blown up. Like the big significant ones haven't blown up. Compound hasn't blown up. Uniswap hasn't blown up. They're adding more users every day. It's hard to imagine a world in which this doesn't just get bigger and bigger.
So Brady, along those lines, I got a chance to listen to at least some of what you were doing last night on Twitter Spaces on Solana, and when you look at this space in general, what projects and what platforms do you think out there are just really underappreciated?
Underappreciated. That's a tough one. On the Solana topic, I think that Solana is worth watching because I think there's a growing consensus in crypto that something important is going to happen there. It's a good set of technologists. It works really fast. People are eager to do stuff there. beyond that, I guess the other thing that I do think is underappreciated in the DeFi world, and I think people would say this is pretty weird, is, the story of the last few months has obviously been non-fungible tokens, NFTs. And we've already got some DeFi projects out there that are looking at using NFTs as collateral. So a way that you can, put an NFT in and borrow money against it. And so you've got native collateral on the internet, you've got native property on the internet, and then you're doing internet native lending. I think that is probably going to end up being surprisingly powerful, particularly as NFTs start to do a lot more things besides just logging artworks and collectibles, and I think we'll see more of that all the time.
Cool. Something to watch out for. Brady, we got to wrap it there, but thank you for joining us this morning.
Yeah, sure.
Thanks, Brady. See you soon.
That was CoinDesk senior business reporter Brady Dale. Coming up, checking in on Asia and the crypto markets. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the daily forecast, June 18th, 2021. I'm Angie Lau, editor-in-chief of Forecast News, covering all things blockchain. Coming up, China's crypto mining clampdown sees miners looking for more than one safe haven. Shanghai tries out digital yuan, and the launch of a decentralized rival to Airbnb. Let's get you up to speed from Asia to the world. Following on from recent crypto mining clampdowns we've reported on in Yunnan, Qinghai, Xinjiang, and Inner Mongolia in China, local media is now reporting that Ya'an in Sichuan province is the latest to be hit. The reports say that miners are being told to shut down for inspection, though full details are unclear as yet. With the clampdown continuing, many players in the industry have been looking to diversify around the world. Kazakhstan is one alternate location that we've been hearing a lot about, though Hong Kong-based Poolin, which has significant operations in China, is looking elsewhere.
Of course, we've considered, literally every place across the globe, because, that's what we do. We consider places. That's my job. However, I think Kazakhstan is kind of hit already a sort of ceiling to how many miners can move into their country. I don't think there's any space left.
De La Torre says Poolin is now looking at options across North America in both Canada and the United States. Top of their checklist is finding low electricity costs as well as keeping an eye on the environment by using hydro or solar power. Meanwhile, Shanghai has just seen its first promotion of China's digital yuan, a currency still known to many by its original project name, DCEP, or Digital Currency Electronic Payment. And so far, it's gone through 13 rounds of testing in 8 cities. Shanghai held a lottery to give out 350,000 virtual red envelopes each, containing 55 digital yuan, which had to be spent at designated shops. Those envelopes have now been given out, and Forecast News actually got to follow one lucky recipient as he set out to try spending his prize.
From my perspective, it's mostly convenient for me to use digital yuan, just like the WeChat Pay or Alipay. And for the processing of the transaction, I think it takes more time than current Alipay or WeChat.
Yan says people are so used to using their phones in this way that he had no concerns giving it a try, but at the moment, too few shops accept digital yuan to make it a practical alternative right now. But many experts are predicting an official rollout in time for the Beijing Winter Olympics in 2022. On to the markets. Bitcoin was down just over 4% at a little under $38,000 as of 4 p.m. local Hong Kong time. And in the top 10 for cryptocurrencies, it was a day of red, almost across the board, with Polkadot falling just under 7% and Uniswap down 5%. And finally this, move over Airbnb. There's a new competitor in town, and this time it's decentralized. D-Travel is a decentralized home sharing platform with a team spread out across Australia, Vietnam, and the United States, and created by former travel executives in partnership with Binance-backed Travala.com. The difference? It will be community-owned, and its soon-to-be launched native cryptocurrency, the TRVL token, will give members of the community voting rights, allowing hosts and travelers to keep control of the platform.
We're unique in that from day one, we want to create a sharing economy that is actually truly shared, not only in the sense that the value is shared, but in the sense that the decision-making is shared. The formation of the entire platform is shared.
Kim says the problem with the sharing economy at the moment is that big corporate stakeholders are still in charge, which is not always good for hosts or guests. The other key difference is that hosts will not pay fees, which D-Travel says will keep prices even lower for customers. And in a lockdown world where people are desperate to see family and friends safely again, we could be set to see an upsurge in demand for home sharing options. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in for a live look at Bitcoin, the CoinDesk Bitcoin price XBX index right now at 37,000, just under $200. Bitcoin is down almost 4% over the past 24 hours. And the CoinDesk Ether price ETX index at 2275. ETH is down almost 5% over the day. And joining us now to discuss the crypto markets is Richard Byrath, CEO of DigiNext Equos. Welcome to the show, Richard. So it appears that we are still range bound. When do you see a breakout, or is the market still a little spooked with the Fed announcement and a potential rate hike coming up?
Yeah, look, I think these markets have been in a difficult place, since Elon started tweeting. We've gone through a period of obviously consolidation. The market's looking to accumulate. I think it was actually quite negative that when Michael Saylor announced his recent $500 million raise to buy more Bitcoin, that actually the price of Bitcoin did nothing. I think that was indicative of just how little buying power there is left in the market. So I do think that we're going to consolidate for a while. That said, obviously wallet address inflows that we've seen accumulation by long-term holders. And so that's obviously always very positive for things. I've just seen, by the way, that you have my title as DigiNext CEO. It's important to flag we rebranded this week, actually as Equinex. So I can maybe talk about that for a little second.
Before we do, Richard, back in March, you had a price target of about 175,000 in Bitcoin by the end of the year. That's obviously quadruple from where we are right now. And as you mentioned, that when Michael Saylor did that purchase, the market didn't move. So what led you at that time to make that prediction, and what has changed fundamentally that makes you think now it's going to be range bound? I mean, is it stuff like Michael Saylor's purchase not moving the markets, but Elon Musk's tweets doing that? I mean, what exactly what's changed in your modeling?
Just to be clear, we still think that we see 175,000 in this cycle. It's probably just been pushed back a little bit by Elon and his big mouth. Really what we think is that it spooked a lot of people. Elon's initial move had obviously put this front and center for a lot of boards, a lot of CFOs and finance departments needed to understand why exactly Tesla was putting Bitcoin on the balance sheet. The complete U-turn and reversal of them accepting Bitcoin and the crash that then came actually relieved that pressure from a lot of corporates. If you look at the adopters that we've seen this cycle, you've seen people like, Elon Musk, Michael Saylor, Paul Tudor Jones, Stan Druckenmiller, Bill Miller. These are all people that control their organizations, both asset managers and corporations. Michael Saylor is the chairman and CEO and largest shareholder of MicroStrategy. So, he has the sort of control that can make moves like this. And obviously his aggressive approach is unlikely to abate anytime soon. But what changed is the fact that the pressure that these people have started to put on the rest of the broader, corporate community, the corporate treasurers, but as well as the asset management space, is just prolonged that moment within which they have to consider it. And it's also given an excuse why they don't need to. Obviously, inflaming ESG concerns around Bitcoin, the environmental element of using electricity to, support the network. I mean, it's not an argument we agree with. We actually believe that from an ESG perspective, Bitcoin is very positive. The amount of land that can be made usable and monetizable through implementing sustainable energy networks and then renting them out to Bitcoin miners is actually going to likely change clean energy networks for the future. So, but what it's done is it's given excuses to a lot of these asset managers who are looking at ESG in every kind of investment that they make, and this is a critical element always.
I'm curious what your outlook is on for Ether. How you think, if you have a price target for that, and if you think that Ether is affected by this sort of larger general narrative that you're talking about, sort of like Elon Musk and this crew, who are able to drive prices.
Yeah. Speaking of which, you guys just launched ETH perpetual futures, so you can maybe touch on that too.
Yeah, we launched ETH perpetuals a little while ago, but I think, if you think about ETH, it's an asset that obviously is going to at some point be, the protocol's moving to proof of stake. So the narrative for these ESG focused investors actually shifts in a funny kind of way towards ETH. And, I speak to a lot of hedge funds and, I've had fairly comical conversations where they say, proof of stake is won against proof of work as far as we're concerned. And, when you see that sort of thin level of understanding of what proof of work can provide in terms of security to a network versus something like proof of stake, which is effectively just a controlling the network of a portion, then I think they become, it just shows you that we've still got very basic knowledge in this market. And I think it shows you that we're still very, very early.
Richard, one quick question. So you said you were rebranding. Is that any change in your business at all? Have you guys changed what you guys are doing?
No, not at all. I mean, when we listed on NASDAQ, we made a very significant focus on the crypto financial services business. We actually, prior to listing, we divested the blockchain solutions business that is actually interestingly focused on a number of ESG concerns. And we divested that business, and actually and that brand was always very aligned with that business, DigiNex. Actually, the crypto element of what we've been doing is under the brand of the exchange, Equos. We launched our own token, Equo. And so we said, okay, well, look, we need to just pay attention to our heritage in the tail end of the name, so Equonex. But move forward as just a crypto financial services firm. And that's been really important. It's come at a very critical time in our growth as well. Mm-hmm. The exchange is now doing $250 million of volume. That's up 10,000% since we listed on NASDAQ in October last year. That's on a daily basis. And, we recently got approved by the FCA as the first standalone custodian under their MLD5 registration. Our fund is really outperforming with Bitcoin, flat since the end of January. The fund's up like 45%. So it's all things kicking. There's a lot of energy in the offices.
Yeah, Richard,
people are excited.
And you're still bullish as ever, which is always fun to see. Thank you very much, Richard, for joining us this morning.
Thanks for having me. Good to see you.
Well, that was Equonex CEO Richard Byworth. Coming up, celebrating Black NFT art on Juneteenth, and CoinDesk's global policy and regulation managing editor Nick Day.
CoinDesk and CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick. So we have news out that the New York-based Signature Bank has added stablecoin TrueUSD into its blockchain-based payments platform. What does this mean?
Yeah, that was an interesting move. I think it was announced this morning. Basically, Signature Bank has it's been using its own internal stablecoin for quite a while now. It seems like it will now be, adopting TrueUSD. TrueUSD, I think the most interesting part there is, I believe it's issued by Trust Token, which was acquired by a company called Tecteryx earlier this year or late last year, and it's been there's been a little bit of lack of detail around some of the around this acquisition that folks have been asking about.
So is that Tether-like in the way that it's not that it's opaque?
I guess it's a fair comparison. I'm not sure how close to Tether it is. It did provide attestations, and if you go to its website now, you can download a report that says it's an attestation, filed fairly recently. There was a period in the middle where I think those attestations stopped, and it's unclear whether it was just because of the acquisition and trying to dot all the legal I's there, or if there were actual issues regarding the transaction.
Nick, you noticed in your last newsletter that there's just been a flurry of activity in Washington on the regulatory front. What are some of the main things that have caught your eye?
Yeah, so I think probably the biggest thing are all the hearings we're seeing this month. We've spoken about this before, but just the sheer fact that there are at least, I think, 4 congressional hearings or 5 congressional hearings that all, involve crypto is a level of scrutiny I'm not sure we really expected 6 months ago. And it's going to be, the interesting part is kind of who's involved in these hearings, right? We've got folks who are talking national security concerns, and we have folks who are talking oversight concerns. And we also have folks who are, some of them are kind of comparing this idea of a central bank digital currency to Bitcoin and other cryptocurrencies, and trying to figure out, which is safer for consumers and whether or not one is a, clear advantage. So, we haven't seen legislation yet or any proposed legislation yet, but that's going to be the next thing to watch out for. And the way these hearings are going so far, I imagine the industry is going to want to pay really close attention to the details when, if and when this legislation does come out.
So speaking of Congress, you of course, you can pick up the phone and call any congressman you want, and you get to talk to Tom Emmer. What did he have to say?
Yeah, so I was able to speak to Representative Emmer yesterday. This was about the NRCC, the National Republican Congressional Committee, accepting crypto donations through BitPay. So he said that this has been in the works for a while, as long as he's been chair of the NRCC, in fact. And lawyers with the committee have spoken to the Federal Election Commission as well as to legal and ethics folks to ensure that everything's squared away as far as regarding these donations. But the most interesting aspect to me is he said that this was in response to people asking if they could donate in crypto. So, Congressman Emmer has been a proponent of crypto for a while on the Hill. But
yeah, are we noticing a division by partisan lines more and more? I mean, are people wanting to give to the Republican Party because they see Elizabeth Warren and Brad Sherman trashing crypto?
And former President Trump.
Yeah. Well, I think Trump's joining the squad with this one.
It is kind of a little funny there. I think it's too early to say whether there is a partisan divide yet. I mean, for sure, we are seeing, on the one hand, you have the NRCC accepting crypto, and on the other hand, House Democrats have created a working group to figure out how to legislate crypto. and it is a only Democrat group, so it's not bipartisan. But as far as actual donations go, based on FEC records as of a couple months ago, it seemed like there was pretty strong support for candidates from both parties. We had folks donating to President Biden, we had folks donating to Republican lawmakers. So I think, regardless of what's going on in DC, the actual donor situation, it may be premature to make any conclusions.
It's just another form of money. All right. Thank you very much, Nick, for joining us in that update. Have a great weekend. All right. That was
the CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right. See this dance, the Renegade. If you're on TikTok, you should know. It was created by Jalaiah Harmon, and now she's been immortalized as a hologram NFT that drops on the Juneteenth holiday in celebration of Black art. And joining us now is the creator of the holographic NFT, Asad Malik, CEO of Jadu, a mobile augmented reality platform that aims to create hyper-realistic holograms. Welcome to the show, Asad.
Thank you. Thank you for having me.
Good to have you. All right. So it's interesting that you chose Jalaiah Harmon for this project because there was a bit of controversy. She created this dance. It was popularized by white influencers on TikTok. Jalaiah didn't receive credit for it until later on. And you've chosen to release this NFT of her doing the Renegade dance on the Juneteenth, a holiday that celebrates the emancipation of Black Americans. How is this connected?
Sure. So, I think on the internet, one thing that we've seen happen repeatedly is the cultural trends coming out of Black creators, often young Black creators that don't get the credit or the ability to monetize their work. So I think this is a really interesting example of that because the Renegade dance, and also we have two other dances as part of this collection, Cookie Kawaii's Throw It Back and Blanco Brown's Dick It Up. So all three of these dances kind of define TikTok as it became this huge platform over the last year or two. And the three dances actually have over 10 billion views combined. And all three of them kind of blew up in a way that wasn't connected very much to the creator. And Jalaiah is the prime example of this because no one even knew what the origin of the dance was until the New York Times kind of broke the story last year, saying that this 14-year-old girl in Atlanta had come up with a choreography. And at that point, she got some spotlight. She got to perform at the NBA All-Star game and on the Ellen show. But what we are trying to establish here is that NFT tokens as a way of capturing cultural value for the original creator. And that's the kind of statement we're trying to make with this.
It's really interesting. So right now, this is kind of more of a symbolic thing, though, because you've basically chosen a handful of creators and you're, in a way of honoring their contribution. But this is a much larger problem, as you just said, on TikTok itself. I mean, part of it, just the nature of the medium, right? You have people creating dances, and then the dances kind of spread throughout TikTok. And then it's often very easy to lose track of who was the original creator. I mean, how do you address that larger problem? Do you see NFTs actually working to address that larger problem going forward?
Yeah, absolutely. I think there are a lot of pieces to that. Tracking dance moves all across the internet isn't exactly the easiest way of bringing back royalties to the original creator. I think we're going to see a lot of interesting things happening over the next couple of years in terms of motion being recognizable in videos and things like that AI will kind of enable over time. But I think for now, we wanted this to be kind of a symbolic thing because we are an augmented reality company at the core. And I think that what is happening is that we've been trying to make AR a thing for the last 5-6 years. And it's a very nascent industry, even more so than crypto. And we are now entering crypto and seeing this convergence of this idea of the metaverse and how augmented reality can play a role utilizing NFTs and how that will make our platform more robust. And holograms are basically these, what you see on the screen. We capture these with 106 cameras. So we actually reproduce the artist in complete 3D and have their performance as it was authentically captured. And we thought that it was a great idea to start off this idea of people being able to own certain performances and certain holograms with these three first holograms, because it's going to be a way of perpetually bringing these to these three artists.
Yeah, well, good luck on the drop. That happens on Saturday, June 19th with Jadu. Thanks for joining us, Asad.
Absolutely. Thank you.
Right, that was Jadu CEO Asad Malik. Time now to check in with Crypto Twitter with our tweet of the day. This one from top Spanish bank BBVA, tweeting, "So delighted to announce that we are the first bank in the Eurozone to offer a Bitcoin trading service," retweeting a CoinDesk tweet, of course, about the new service, which is available to private banking clients in Switzerland from June 21st. All right, that's it for First Mover. CoinDesk TV is off Monday for the Juneteenth. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.